Hello and welcome. You're watching Markets Today. I'm Sakshi Batra and I'm here to give you a wrap up of what the trading session looked like in today's session. Well, in fact, if you saw, it was another day when we saw free fall in the stock markets right from the word go. In fact, during the intraday session, Sensex has actually slipped over 1400 points intraday. The Nifty also slipped sharply. However, there was a lot of volatility that we did expect because it is the FNO expiry trading session for this entire month, and we did expect some volatility to happen. India VIX also jumped by over 10% at over 23.6, indicating very high volatile levels that we were about to experience throughout the trading session. And that's what exactly happened. Of course, investors heaved a sigh of relief as in the second half of trading session, a whole host of recovery really happened, and the Sensex ended with a loss of 580 points, but definitely much better than the sharp decline of about 1400 that we had seen intraday as well. At the closing level, the Sensex was down 1%, recovering most of its losses of the early session and ended at 57,276. The Nifty was also down by about 170 odd points, or just about 1% lower, and ended, managed to end above 17,100 mark. Throughout the trading session, it also was seen slipping below the 17,000 mark as well. But the good part is that 17,100 went protected at the end of the session. When we talk about these stocks, about 1447 shares advanced in today's trading session, whereas 1832 shares declined and 90 shares remained unchanged at the closing session. In terms of other stocks that really performed as far as the Nifty is concerned, or did see a maximum cut, HCL Technologies, Tech Mahindra, Dr. Reddy's Laboratories, TCS, Wipro. Talk about the big bang IT names. All of them were seen dragging the D Street overall. These were the top Nifty 50 losers today. The gainers included the likes of Axis Bank, SBI, Maruti Suzuki, Cipla, Kotak Mahindra Bank. And among the sectors, it was the PSU Banking Index that was actually up by 5%. The Nifty Bank also ended higher in the green as we closed the session. The autos and the bank sectors actually rose about 0.3 to 1 odd percent, but FMCG, realty, pharma, and IT shed 1 to 3% odd. Talking about the broader markets, mid cap and small cap indices both were down by over 1% in today's trading session. Now, the clear reason was the weakness in the global equity markets caused by the Fed commentary on raising interest rates as soon as March, and also perhaps in every meeting that comes thereafter. Now, that is something that definitely hit the investor sentiment in today's trading session. Of course, to back it up, it was the oil prices that reached $90 a barrel, hitting the Indian stocks as well, because India is an oil importing nation, and we did see a whole host of sectors that import oil as a raw material getting impacted in today's trading session as well. In the primary market space, there was action yet again because Adani Wilmar IPO opened today, and it is the joint venture between Adani Enterprises and Wilmar Group. Adani Wilmar was subscribed 0.3 times today, which was the first day of bidding. The offer received bids of over 3 crore equity shares against the IPO size of 12.25 crore equity shares. The retail, investors portion was subscribed 0.6 times to the IPO, whereas the non-institutional subscribers put in bids for 5% as against the reserve portion. And the qualified institutional buyers also subscribed 0.11 times of their reserve portion at this point in time. We did speak to the experts to understand which way are the markets really headed as we inch closer to the big bang event of the union budget. So, Manish Shah of Nifty Trigger spoke to us, and he does believe that on the lower side, for the Nifty, the support is placed at 16,800. As long as the Nifty manages to hold on to this support, we should be seeing Nifty coming back into its growth trajectory. But on the lower time frame as well, the Nifty seems to be making a double bottom pattern, is what he believes. A break above 17,250, on the other hand, should definitely take the rally further to 17,700, is something that he definitely keeps an eye out on. But with the union budget to be announced on 1st February, he does believe there'll be a whole host of volatility and uncertainty in the sentiment. So you can't rule out more volatile trading sessions really coming along. We'll keep you posted with all the developments from the world of business and news and then stock markets. So do stay tuned on to Business Today. Like this video if you like it, and also subscribe to our YouTube channel and stick with us via all our social media platforms as well. Thanks for tuning in for now.